everyone. I am Dr. Janani M, faculty member from the Department of Professional Accounting and Finance. Today we will see the subject called GST. In that, we are going to see the introduction of GST. Today we are diving into something that affects every single one of you, whether we realize it or not. How many of you bought a coffee this morning or ordered food online? Maybe you bought clothes or electronics. Well, you have paid GST today. I'm going to walk you through the goods and service tax, what it is and why it matters, and how it impacts your life as students, future entrepreneurs, or consumers. By the end of this session, you will understand not just how GST works, but why India's government made such a massive shift in its tax system just a few years ago. Let's start with a simple question. How many different taxes do you think you pay when you buy a product in India? Take a guess. The answer used to be complicated. Before 2017, it was a chaos. Today, it is all unified, and that's what GST is all about. GST stands for Goods and Services Tax. It's a comprehensive indirect tax that is levied on the sale and the consumption of goods and services across India. Think of it this way. Every time money exchanges hands for a product or services, there is a tax, and that is GST. The big change happened on July 1st, 2017, when India has implemented GST and replaced multiple indirect taxes overnight. Before GST, we had excess duties to manufacture goods, service taxes on services, value added tax at the state level, multiple other taxes and levies. It was like having 17 different remote controls for one TV. GST consolidated all of them into one. The core philosophy of GST is one nation, one market, and one tax. This is the fundamental concept behind GST. Before 2017, if you manufactured a product in Maharashtra and sold it in Karnataka, you faced different taxes at different stages. A business had to maintain a separate accounting for each stage. Let's take a real lifetime example. Imagine you are a small manufacturer in Bangalore. You buy wood from Tamil Nadu under the old tax system and manufacture it in Karnataka, you should pay a different tax. And to sell it to a retailer in Kerala, yet another different tax. You need an accountant just to track all these different tax regimes. With GST, it is all unified into one. Let me break down the 5 key reasons why GST was introduced and why it is important for you all to understand. The first thing is simplification of tax system. Before GST, the Indian tax system was fragmented. Business had to comply with multiple tax codes, different filing processes, and different rates across states. For students pursuing commerce or MBA, understanding GST is now an essential knowledge. Companies during your interviews will ask about GST compliances. For future entrepreneurs, instead of managing 10 different tax registration, you now have to manage one. Your accounting becomes straightforward. And the next thing is boosting to ease of doing business. When you simplify taxes, you make it easier for business to operate. Let's take an example. A young entrepreneur starting a digital marketing agency today can focus on growing clients instead of figuring out which tax to pay where. Compliance burdens is much lower. This is why India's ease of doing business ranking improved significantly after GST implementation, and there is increased revenue to the government. Here is something interesting. By bringing more businesses into the formal system and getting registered under GST, the government captures tax that was previously evaded or lost. And the statistics speaks for themselves. Before GST, many businesses operated informally to avoid multiple taxes. But after GST, formal registration increased drastically. When a small shop registers for GST, the government knows about it. Tax compliance is improved and the revenue also increased. And the next point that we're going to discuss is formalization of economy. This is connected with the previous point. When GST registration had become mandatory, even for small businesses, vendors and service providers come into the formal economy. Your local vegetable vendor, small restaurants, tailors, many now have GST registration. This means they maintain proper records, the government data has on their income, it is easier to get loans where the banks see formal income. Workers get some sort of production. Next is consumer benefit. This is where you come in directly. How does GST benefit customers like you and me? First of all, it's transparent. You see exactly the GST amount on your invoice. When you buy a shirt for 500 rupees and you see the invoice has 90 rupees GST and you exactly know how much tax you're paying. Second, the reducing cascading effect. Before GST, taxes were levied at multiple points and the manufacturer, wholesaler, retailer would pay tax on the full value, not just the value that they added. This cascading effect increased prices for the consumer. Let's see a small example here, where the manufacturer is selling a fabric to the wholesaler, where the cost is 100 rupees and he charges 20 rupees as tax and the wholesaler pays 120 rupees. And now it's time for the wholesaler to sell it to the retailer, where the wholesaler is charging 120 rupees along with that tax of 24, where the retailer has to pay 144 to the wholesaler. Now it's time for the retailer to sell it to the consumer, where the consumer would pay 144 rupees along with that 28.8 as tax and the total amount as 172.8. With the GST's input tax credit system, you will ultimately pay less. Input tax credit. This is the beating heart of GST. Understanding input tax credit is crucial because it's what makes GST an efficient system. What is input tax credit? Input tax credit is a credit that a business can claim for the GSTs that are paid on their purchases or input services used in the course of business. This credit can be offset against the GST liability on sale, that is their output tax. This reduces the overall tax paid to the government. Let me decode this step by step. Think of this, you're starting a small business making handmade candles. You buy wax for 1000 rupees and you pay GST 180, assuming an 18% tax, and you buy wicks and fragrances for 500 rupees and you pay 90 rupees as GST, and the total tax that is paid on your input is 270. Now you make candles and sell them for 2000 rupees and you charge GST at rupees 360 on your sale. Without input tax credit, you would pay 360 to the government, but you've already paid 270 on your inputs. You are paying tax on tax. With input tax credit, you claim the 270 as credit against 360 rupees output tax. Now you pay only 90 rupees to the government and that 270 is your input tax credit. This is the efficiency of GST. Tax is paid only on the value you added, not on the entire value at each stage. Let's take an example of furniture manufacturer. Let's trace a wooden table from manufacturer to consumer. At the stage 1, where the timber is supplied to the furniture manufacturer, the timber costed 5,000 rupees and GST charged at 5%, where he pays 250 rupees as GST, and he is eligible to claim that 250 rupees as input tax credit. Next, the manufacturer is adding value with his labors and the equipments and making designs, and the manufacturer is now adding value of rupees 3,000, and now he is selling it for 8,000 rupees, and the GST charged on 8,000 rupees at 5% is 400. Now he will claim the 250 that he has paid on the timber purchase and pay rupees 150 to the government. Now the retailer is selling the product to the consumer, where the retailer's cost is 8,000, GST on his inward purchase is 400, which is eligible for input tax credit, and the retailer is adding value of 2,000 rupees for storage, display and the services, and he's charging 10,000 rupees to the consumer, and GST charged is 500, and he has input tax credit of 400. After claiming the input tax credit, he pays 100 rupees, and the final GST that is paid to the government is only 500. The logistic movement across states. Before GST, moving goods across state was a nightmare. Each state had its own tax regime. Under the old tax system, if a truck is loaded with goods, it had to stop at the state borders for tax verification, pay different taxes in different states, maintain a separate documentation for each state, and to deal with state specific registration. Let's see the GST in different sectors. Now GST rates are majorly into 5% and 18%. On certain essential items like unprocessed food, wheat, vegetables, GST is 0%. On the edible items like edible oils, packed foods and most of the household products, GST is charged at 5%. When you buy software, applications or IT services, you pay GST at 18%. On certain luxury items and high-end cars, GST is paid at 40%. Let's look into the real lifetime example where your college canteen food would be charged at 5%. Your online course from Udemy would attract 18% of tax. How GST affects you right now? As a consumer, every purchase you make reflects GST. Understanding it helps you make informed choices and verify bills. As a future professional, if you join a company, you will work with GST compliance. If you start your own venture, you will manage GST. As a citizen, GST revenue funds government programs, healthcare, education, and infrastructure. So, higher compliance is equal to better public service. Now, the current challenges with GST. Compliance burden for small businesses. Even though GST is simplified thing, compliance like filing returns, maintaining records remain challenging for very small businesses. And the changes in GST rate. The government occasionally changes GST rates based on the economic conditions, and that affects the pricing in the market. Now let us see the dual model of GST. Dual model. On any transaction, you will find CGST and SGST getting charged. On an intrastate transaction, Central Goods and Service Tax, that is CGST, is the revenue that is going to the central government, and the state GST, SGST, is the revenue that is going to the state government. When you see 18% of GST, it is actually 9% of CGST and 9% of SGST. Why is it called dual? This ensures both the central government and the state government benefit from the tax, and it distributes the resources. On an interstate transaction, there is IGST, Integrated Goods and Service Tax, which is collected by the center and distributed to the destination state. Let's look at the key takeaways from this. GST is a unified tax system that replaced multiple indirect taxes in India. Input tax credit is the key mechanism that ensures tax is levied only on the value addition, not on the entire transaction value at each stage. GST benefits everyone. Businesses get a simpler tax system, government gets better compliance and revenue, and the consumers get transparent pricing and potentially lower costs. As students, understanding GST is essential, whether you become entrepreneur or a professional or an informed citizen. GST is not just a tax system, it's a structural economic reform. It has changed how India does business. As you enter the professional world or start your own venture, this knowledge will be invaluable. The tax landscape will evolve, but the principles behind GST, like transparency, efficiency, and equity, are here to stay. Thank you. Let's see another interesting topic in the upcoming session.